money very easily, and then working class people are kind of getting screwed. So think about this: prices went up. You have more inflation this month than you've had since 1981. 1981 is a long time ago. I think Dougie Fresh was a teenager in 1981, and now he's almost a senior citizen. So you have this massively high inflation right now against the backdrop of workers' wages declining. So if you are trying to build wealth by working extra hard, working extra hours on the job, saving your money from the job, that's just generally not going to work because the cost of everything's going to outpace the growth of your income and the growth of your resources. So you the reason you invest is because when you dissect the economy and you look at where the money is going, the money's going toward things that tend to pop up the stock market. So where the Fed is being challenged right now is there are people, smart economists who care about human beings, who are now saying to the Fed, the same way you're increasing interest rates in order to reduce the prices of gas and food and everything in between and shelter, you should also be doing things to reduce the value of stocks. You need to do things that are going to drop stock prices too. So, and by the way, I see you're asking for the link, Dorothy. I'll put the link in there again for tonight's event. Also, if you can't see it here for whatever reason, you can feel free to just go to boycewatkins.com. The event is free, and again, the focus is financial security and how to do it without it costing you that much, without having a lot of knowledge, and without having to do it all by yourself. So feel free to join us tonight. We get started at 7 p.m. It's going to be a good lecture. I think every lecture that we do hits the nail on the head because I understand you all very well and exactly what you need. And my primary focus is Black people and Black wealth. I don't really think about much of anything else. So with that said, this is why you. So when you explain to your child why everybody in our family must invest, that's exactly why. Because the way the Fed kind of moves money and the way they move money during the pandemic is they just pumped it into businesses, and they pumped it big businesses, big corporations, which tend to show their value on the stock market. So if you remember during the pandemic, the whole economy is going to hell, but the stock market's propped way up. But then they also had the stimulus payments and stuff like that went out. But they know that a certain percentage of society is just going to spend their money anyway. So think about it. You get your stimulus check, you go to the mall, you're buying stuff at the mall. Well, people who own stock in the companies that are in the mall are going to end up making money. So a lot of you as investors saw your stocks go up because of that. All right. So let's see what else it says here. This is CNBC. They said the prices that consumers pay for everyday items surged in March to their highest level since the early days of the Reagan administration, according to Labor Department data released Tuesday. The Consumer Price Index, which measures a wide-ranging basket of goods and services, jumped 8.5% from a year ago on an on an unadjusted basis, above even the already elevated Dow Jones estimate of 8.4%, excluding food and energy. So if you take out food and energy, the CPI went up 6.5%. So it's really energy and food prices that are kind of driving everything. Energy, of course, back to the connected back to what's going on in Russia or in Ukraine, and then food prices going up. That's just supply chain. I imagine. The data reflected price rises not seen in the U.S. since the stagflation days of the early 70s and early 80s. So process this, right? Um, Everything that's happening right now is indicating that a recession is coming. And it's an ugly recession because you're going to have inflation at the same time. So stagflation is kind of like somebody saying, oh, by the way, tomorrow it's going to rain. Oh, and also you got to you can't stay in the house. You have to sit out in the backyard, right? So it's not only is it raining, but you're gonna have to be outside. So what you're having this economic rain, which would be the inflation, and then you have the other traumatic reality that your economic growth is slowing, your corporate earnings are slowing down, and so ultimately there is a huge risk of stagflation. 8 out of the last 9 times that the Fed has increased interest rates at this magnitude that they're going to do in the next year or two, you've had a recession. So you have a recession coming. Make sure that you get ready. Some of the stocks that I picked for you guys, that if you log in at the blackstockmarketprogram.com, You can see, make sure you go to the section on what Dr. Boyce is buying. A lot of the stocks that I picked are stocks that are predicted to do well in this environment. Now, moving on, they say core inflation appears to be ebbing, rising 0.3% for the month, less than the 0.5% estimate. Despite the increases, markets reacted positively to the report. Stock market futures rose and government bond yields declined. They say, quote, the big news in March, the March report, was that the core price pressures finally appear to be moderating. So remember, the stock market is a forward-looking indicator. That's what we call that in economics. Basically, the stock market reacts today based on what they expect to happen in the future. So a lot of what you're seeing in the market, the reason that it's somewhat confusing, right? You would say, well, why would it be that we have the highest inflation numbers that we've had since 1981, yet the stock market went up? It's not supposed to go up, it's supposed to go down, right? No, it's going up because they're not looking at what happened today or what happened yesterday. They're looking at what's going to happen further down the line. So their thought is, look, these numbers on inflation are so bad that it probably won't get any worse. So it's probably going to get better. So we're going to go ahead and react now as if things have already gotten better. You follow what I'm saying? So this is why you can't, when you're talking about investing, you'll hear people say things like, I read in the newspaper that Exxon Mobil is going to acquire a new oil well. So I'm going to buy their stock because they just got this new oil well. That's not a reason to buy the stock. The investors in the stock market already know about the oil well. They read the Wall Street Journal just like you do. All that information is already in the price. So the price, if the oil well was a good thing, the price has already gone up. What you're speculating on actually is not whether or not the oil well is going to benefit them. Everybody knows that. What you might be speculating on is how much will it benefit them relative to the expectation. So, for example, if I sign a number one draft pick to my NBA team, and I say, yeah, we're going to be a better team because we signed this number one pick. Yeah, everybody knows that. Everybody knows that getting a number one draft pick is going to make your team better. The question is, are you getting a Michael Jordan or are you getting a Sam Bowie? If you recall, Michael Jordan, obviously, Michael Jordan was one of the greatest players in history. Sam Bowie was one of the biggest busts in history. Sam Bowie was picked ahead of Michael Jordan. So amongst number one draft picks, you have variation in outcome, right? The expectation is always the same. The number one pick is always expected to be great, but there's variation in how great that number one pick is relative to the expectation. So, so in this particular case, we know that inflation's bad. We know that it's going to stay bad. What a lot of people are speculating on is whether or not it's going to get better. So by the market moving upward today, in spite of the fact that inflation is at its highest level since Dougie Fresh was a teenager, the reason that it went up is because the overall market collectively believes that it probably won't get much worse than this. Now, if it comes out later that it does get worse, if our inflation goes to 9% and 10%, and there's indicators to say that that's going to occur, let's say, then you're going to see stock market prices decline. You will see prices decline because they're going to say, holy crap, we thought it was going to be bad, but it's even worse than what we thought. This is terrible. Another thing that can rattle your stocks big time is if these companies don't keep making money like Pablo Escobar, it's going to get ugly. So a lot of these companies are incredibly good at making money, primarily because the American consumer is very resilient. Americans have a tremendous amount of economic self-confidence where we will spend money even if it's money that we don't have. We will go in debt to keep up with the Joneses. We spend like crazy. Japanese people don't do this. Italian people don't do this. People in Germany don't do this. When I did a research visit with the Center for European Economic Research, one of my colleagues made an interesting point to me that in Germany they make less income than Americans do. They pay more in taxes than Americans do, and they save 5 times more money than Americans do at the same time. He said it's insane how much Americans spend. And I've mentioned to you guys that the reason that spending is high is because you're trained to spend from birth. So part of your mission as intelligent Black people, because you're not trying to keep up with everyone else, you're trying to get ahead of the curve. Part of your mission is that you must counter the spending culture in your household. You must talk to your children about having an investing culture. Because if you are an investor in a world full of spenders, then you will get rich while others get poor. Do you understand what I'm saying? Do you hear the words coming out of my mouth? Okay, so just know that the drought season's coming. You know, like E40 had a song called "The Drought Season." The drought season's coming, and it's natural. You never have good times. Good times never last forever. But even in the drought season, there are amazing investment opportunities out here. You just have to know where to look. Now, let me pop in and I'm gonna look at some of your questions. Okay, Eric says I don't see the link. I'm gonna put the link in here one more time. And actually, if you don't see it for whatever reason, you can find it on BoyceWatkins.com. We're gonna start the event tonight at 7 p.m. It's totally free, and here is the link one more time. So give me a yes. Oh, you know what? I know why you guys can't see the link because I put it in here wrong. I'm so sorry, guys. With Zoom, they ask you, do you want to share this with everybody or just with the panelists, stuff like that. So I actually have panelists. I'm so sorry. I probably confused the hell out of some people. I that's my bad. My bad. All right. Okay. Thank you, Picola. Picola forgives me. So if Picola forgives me, then that must mean I'm okay. All right. So the next question is Letitia says, what happens when the stock is delisted? Do investors lose all the money they invested? Why do companies make tender offerings? Is this a sign of trouble for that company? Okay, so let's start with that first question. Why is it? Let's see. What happens if a stock is delisted? Yeah, I mean, if a stock is delisted, that probably means that the company was already having some problems to begin with, and and I think the terms and conditions might differ. In a lot of cases, though, you can lose pretty much all your money, especially if the delisting is due to significant financial problems with the company. Now, in other situations where they're just delisted for another reason, there might be arrangements made for the shareholders. So don't. So if a company is at risk of being delisted, you don't want to be an investor in a company that gets delisted. The Chinese companies actually lost a lot of wealth, a lot of value because there was a risk of delisting. And so if you talk about a tender offer, now I want to make sure you're talking about the kind of tender offer I'm thinking about. Now, a tender offer is an example where you basically try to buy the company by buying up all the shares. So Elon Musk made a little bit of a tender offer for Twitter, not a complete tender offer, right? He didn't try to buy the whole company, but he bought like 9.8% or something like that, slightly less than the 10%. When he hits 10%, the rules kind of changed, so he went to 9.8%. So he's now the biggest shareholder in all of Twitter. And it's because he wanted to be on the board. He wanted to make some adjustments in the company. I think he chose not to be on the board, but I think he wants to get in there and kind of affect how they do business. Um, so a company might make a tender offer if they just want to, if they just want to buy the company. Companies that tend to get tender offers are companies that are usually pretty weak. Maybe their stock price is low, and there are people that take advantage of that. So you can do that, especially back in the 80s. It was very easy to just go up to somebody's company and just buy the company. That's why there's always a trade-off. If your company is private and it goes public, and you have these public investors, that means somebody can take your company away from you. So, so never think that you can get access to billions of dollars and not have some sort of accountability. Now, what I'm gonna do is answer some of your questions that you guys submitted on the form here. If you log in at the blackstockmarketprogram.com, there's a link where you can leave questions for me, and so feel free to use that link, and I'll answer your questions first. So, Angelia Staples says, "I'm thinking about purchasing marijuana stock. Should I? If so, what company?" I wouldn't invest in one particular company per se. There's a lot of companies out there. The industry is gonna do better over the next 5 years or so because regulations are gonna continue to go down. I would try to invest in several companies, right? So you've got I think Tilray and a few others out there. Maybe find a mutual fund that invests in cannabis. That way you can kind of spread your money out. I wouldn't try to pick a winner in that industry because you don't know who's going to win. Let's see, Dr. Watkins, I have $270 on different stocks. What other stocks should I add to my portfolio using Cash App? Angelia, if you go log in at the blackstockmarketprogram.com and look under the section what Dr. Boyce is buying, and you can see the stocks that I recommend each week. Those recommendations are good for at least a year. So that means you could go back 6 months and find stocks I recommended 6 months. I give you guys about 5 or 6 stocks every week that I either am buying or stocks I would buy for myself and for my own family. And that allows you to take the guesswork out of it. I base it on what the analysts like about the companies, what the risk levels of the companies are, what I'm seeing in terms of of the industry that the company's in. So feel free to take a look at that. If you log in at the blackstockmarketprogram.com, it's right there. If you can't find it or you have any trouble for any reason with anything in the Black Business School, don't excuse me, don't forget that we have a great customer support team. You can email support at theblackbusinessschool.com. Somebody type that in the chat if you can for me so that everybody has the information. It's support at theblackbusinessschool.com. And also a reminder, we have some financial workbooks available now. You guys know we were out of stock for a while because they sold out, and we got more in stock, but they're selling out pretty fast. So if you're interested in taking a look at some of the financial workbooks, we've created these workbooks to cover stocks, the fundamentals of money, the fundamentals of investing. So and we cover every grade band, first through third, fourth and fifth, middle school and high school. So our team of experts put them together. They're for Black children. We didn't create them for anybody else. So if you're interested in taking a look, just go to financialworkbooks.com. That's financialworkbooks.com. Or you can also go to my website, boycewatkins.com, and the link is right there. So feel free to take a look at that. All right, so let's see here. Melody is asking a support question. Yeah, Melody, like I said, any question you have about support, just email support at theblackbusinessschool.com. They'll take really good care of you and make sure that you're in good shape. All right, so let's see. Mark says, I'm 53 and a half and I have California real estate license and software sales. Would you advise opening up a small business? Yeah, I think every Black family should have a family business. But that's my personal bias. The book I'm working on now is called The 10 Commandments of Black Economic Power. And one of the 10 commandments is that every Black family should have a family business. Well, why is that? Well, because number one, having the ability to escape the corporate plantation is essential for your sanity as a Black person in America. The worst way to feel as a Black person in this country is to feel trapped. Like you have to go to this job every day. Even though you hate it, they hate you, but you got to go because you have no other choice. So understanding business allows you to know that if I solve one simple little problem, I'm completely free. Well, what is the problem? I mean, once you think about this, for most people, the difference between complete freedom and complete slavery is about maybe $4,000 a month. That's it. It's not like they're paying you millions to give up your life. You're giving up time with your children. You're giving up your happiness. You're giving up 100,000 hours of your life. And it's not like they're paying you millions to do that. They're paying you, maybe you're making 40 grand a year, 50 grand a year, 60 grand a year. So you're making about $4,000 a month. So here's the point. And I want you to remember is write this down. Share this with your kids. The barrier between freedom and slavery for most Black people is not that high. It usually comes down to a simple question. Can I find some way to make about $4,000 a month in order to help me to survive? If you can solve that problem, then you never have to work for anybody for the rest of your life ever again. If you teach your children how to solve that problem early, where they know how to go and hustle up $4,000 a month so they can pay the rent, pay the car note, pay the cable bill, put a little money in savings, pay down the credit card, whatever it is you got to do, they don't have to go to work. And this is something that isn't really, I think, spoken of explicitly. But when I thought about it like that, I said, "Holy crap, this is crazy! All the stress we go through, all the anxiety, all the the late night staying up all night and stressing out and being mad all the time, all of that can go away if you simply get away from the thing that's stressing you out. And the one thing that makes that difference is the ability to make $3,000 or $4,000 a month on your own. And I guarantee you this: I bet you anything that if you got together with your economic family, you got together with the people that you love, you got together with your loved ones and the relatives you can trust, not your trifling ass cousins. I'm talking about the people that really are serious with you, the people that you can work with. If you got together with them and sat there and had a family meeting on a Zoom and said, we need to figure out how we can help each other make at least $2,000 to $4,000 a month in extra income, I bet you that you'll find a solution to that problem. If we put as much energy into solving that basic problem as we put into keeping up with what Will and Jada did last week, or keep as much energy as we put into solving everybody else's problems, or if we put as much energy into that as we put into getting up and going to work every day, then none of us would have to work for anybody our whole entire life. Your children certainly wouldn't have to. And if you do little basic things like the $5 a day investing plan, which is available to everybody. If you go to the URL, it should be in your course curriculum as well. But I made this available to the public so anybody can go pick it up. It's an ebook called How to Build Wealth by Investing $5 a Day. If you go to blackmoneyminute.com, blackmoneyminute.com is where you can find it. Little things like that will put your child in a position where they have enough resources where they never have to work for anybody. And then if you teach them how to start a business, then they're going to explore those options before they go fill out a job application. And I don't know a single black person anywhere who quit their job and learned how to start a business and was making a little bit of money who ever went back to the corporate plantation. Once they got one taste of freedom, they couldn't go back, even if it meant taking less money, right? So like when I quit my job, I didn't need to make the same amount of money to be happy that I could stay home and not deal with those crazy people every day. I didn't need to make the same money. I was happy making half the money. I was like, well, at least I have, an extra free 8 hours a day to do whatever I want, to spend time with my family, talk to my grandma before she got old and died. So just understand these are not complex problems. They're only complex if you're bogged down with a lot of brainwashing that makes it complicated. America takes simple things and it makes it complex so that you won't even seek the solution. The solutions are very simple. I encourage you to consider that. And so ultimately tonight also, we'll talk a little bit about more of that. So like I said, if you go to boycewatkins.com, if you look at that link I put in the chat, you can join us tonight for the free lecture. It's totally free. And I know you're going to enjoy it because I understand these topics very well, and I think I can help you. All right, so let me see here. Next question is from Dwayne. Dwayne says, how do you determine where you're going to purchase stocks, Cash App, Robinhood, etc.? Dwayne, I look at the apps based on what my needs are and what I like. So some apps will give you a lot of education. If you want to get educated, yeah, there's, I think E-Trade and Ameritrade, they do a good job of kind of giving you extra education. Some apps will give you the news. News is very important when it comes to moving stock prices. So Robinhood has segments where they have news in there. Some of them apps even have like little TV networks on there. I think E-Trade has a TV network where you can like watch financial news if that's what you want to do. But just know that those are not requirements for you to be an investor. I know really great investors who get bored with financial news. So don't think you've got to watch the financial news all day, watch Bloomberg and read financial reports and go through people's balance sheets and all that other stuff in there. You don't have to do all that. You don't have to do all that. So I would kind of think about what you want from your app, and I wouldn't just pick one app. I put my money on multiple apps because I want my money spread out. I don't want any one company to be able to wipe out everything that I have financially. So I try to bury money under every tree I possibly can, so that if one thing goes bad, you've got other things that are going to work for you. And that's a simple concept of diversification. That's the first rule of investing. Spread your money out. Next, Toshana says, how many shares of a stock should you buy? There is no one number, Toshana. The key idea is to make sure your money isn't all tied up in one stock. That's what I would do. You want to be spread out to about 22 to 25 different stocks, or you could just buy a mutual fund, which will automatically spread you out. So I can buy a bunch of shares of one mutual fund that covers, say, the whole S&P 500, a Vanguard fund or something. And that's it. Like literally, I could do that and do the $5 a day investing plan, and my kids will be rich. I could be a waiter at Applebee's and follow the $5 a day investing plan and put my money into one mutual fund, and that is it. And my children would be rich. My children are not in the struggle. They ain't going to end up on welfare. They're not bogged down with student loans. They can buy a house when they want to. They can go start a business. They have more money than their friends, all because I planned ahead. That's the other key rule of investing is you got to understand the value and the power of time. There is no variable in wealth that matters more than time. I have analyzed all the equations. I'm a mathematician. Let's not forget this. I taught mathematics at the University of Kentucky. I taught trigonometry and I taught calculus. There is no variable when I look at the equations, when I look at the math that we do to determine how much money you'll have if you start investing now, if you start investing for Lil Pookie when he's 2, how much money you'll have when you're 27. The number one variable in those equations is time. If you waste time, you have wasted everything. If you waste time, you have wasted your life. If you waste time, you have murdered your family wealth. Do not waste time. So that means if you haven't been doing what you know you need to do, when you walk away from here, I need you to do something. I don't care if you do a little bit. I need you to do something. I need you to do something consistently, because if you do little things consistently over a long period of time, that is how you build a massive amount of wealth. That's where the $5 a day plan comes from, because it's a little bit of money that, if it's invested consistently across a long period of time, it will lead to a massive economic outcome, because you're utilizing the powerful leverage of compound interest. Albert Einstein said that the most powerful force in the universe was not gravity. It wasn't neutron stars. It wasn't, it wasn't anything related to physics. He said the most powerful force in the universe is compound interest. He said, I am utterly confused by how a person, by investing small amounts of money over a long period of time, can have so much wealth in just less than one generation. Warren Buffett invested $142 when he was 11 years old. That $142 is worth about $700,000 today. So imagine if your great grandparents had put $142 aside for you in the 1940s, you wouldn't have any financial problems right now. That is doable. I know black people who've had families do that. My wife had a great grandfather who worked at the University of Chicago as a chemist, who bought some savings bonds for his grandkids in a building in the 1940s, and he paid about $5,000 to $10,000 for this building back in the 1940s. Now that building is worth almost $1 million. And also, in addition to that, in that building, his great grandchildren live in that building rent free, and also are getting income from the tenants in that building. So you don't have to have a lot of money to have a generational plan. You don't have to have a big bank account. All you got to have is a big vision and a big desire and big drive to ensure that your grandchildren are going to be okay. Let me keep going. Next question. Derek asked a question. Okay, it's not a financial question, but I'll answer it. He says, hey, Dr. Watkins, how do you feel the media is spreading fear about this virus? Studies show that, what's that, Derek? Studies show, Derek, that the number one way to get people to read your newspaper is to use fear. Fear is, they say if it in journalism, I think they say if it bleeds, it leads. So fear is the easiest way to get people to do almost anything. It's the easiest way to get people to watch your show, watch your news channel. It's the easiest way to get people to buy products. It's the easiest way to get people to vote for a politician that's worthless. Is you just scare them. So the next election, I want you to take notes of how often fear tactics are used to tell you the Republicans are all going to come kill you and put you back in slavery. So you gotta, I know you got this issue with reparations and stuff like that. I know the Democrats ain't done you right, but we gotta get this Republican out of office. So we gotta make sure that we don't let so and so get in office, because the world's gonna come to an end if they do. That's a common tactic. Next question. Barbara says, how does the coronavirus connect with the stock market as far as movement of the market? The virus is always a variable because changes in the virus, Barbara, can affect supply chain issues. Right now in China, they're having a big issue with major lockdowns in Shanghai, which is a city of 25 million people. I don't think New York, I think that's 3 times bigger than New York City. What's the population of New York City? Let me Google that. I'm really curious. Let me see. What's the population of NYC? The population of New York City is 8.4 million. The population of Shanghai is 26.3 million. So Shanghai is more than 3 times bigger than New York City. So Shanghai right now, this massive city, is under a major lockdown, and it's kind of becoming a big mess. And so what that does is that affects things like the supply chain, because people can't go to work if they're locked in the house trying to avoid dying from a virus. And a lot of people are wondering if those lockdowns can eventually get to the United States. It's possible, but Americans kind of responded to the virus a little bit different from China. China has this zero COVID policy, which doesn't work very well with some of these more contagious other variants that are out there. And so the Chinese economy is getting hit pretty hard. And this virus could end up causing a lot of political and economic instability in China, which ultimately affects the global economy. So if you do see a headline that says that the virus is out of control and it's become a big deal and it's terrible now, um, just know that that could really impact your stocks. Okay, so you got to keep an eye on what's going on with the virus. Lee says, "What's the difference between a correction and a bear market?" Um, okay, I think let's see. There's a technical definition of a correction. I want to say it's 10%. Let me look it up. Let me see. Technical definition of a correction. The technical definition of a market correction. Okay, the general definition of a market correction is a market decline of more than 10%, but less than 20%. That's right. Yeah, a bear market is more than 20%. So I don't think you're in correction territory now. I got to double check. The bear market, you had the bear market during the pandemic for a little while. Most bear markets take about 18 months to recover, which isn't that long of a period of time if you're a serious investor. So when there's a bear market, remember that's a huge opportunity to buy a lot of stuff cheap, and you have to think ahead. I went back to my grandmother's old house. My grandparents lived in this house for 50 years, and they lost the house due to predatory lending. And since that time, the whole neighborhood's kind of decayed and stuff like that. And then I noticed maybe 10 blocks away, they started putting up these little hotels and these fancy condos in places in Louisville where they used to have housing projects. And I saw that, okay, I said gentrification is coming to my grandma's house. So I went to my grandma's house just to see what it looked like, because we haven't seen the house since they lost it in 2004. And I noticed that the house had been completely remodeled and redone and just made into something completely different from what it was when we lived there. And the price that it was listed for was insanely high. It was far too high for where it was located or anything like that. And my speculation is that the investors in this house are planning for 5 years down the line when finally they start building those fancy hotels and fancy condos in that section of Louisville. So ultimately, when you're investing, when you see a bear market, smart investors, they run to the stock market when there's a bear market because they know that everything is on sale super cheap. And if you can just hold out, this is why liquidity matters. This is why you get some extra cash, you stack your cash, especially if the prices are super high, you stack some cash so that when you see a dip, you can jump in and take advantage of that dip and make money when you see the recovery. Because there's never been a time in history where the stock market has declined and not recovered. So don't ever let anybody scare you by telling you that the stock market's going to crash. If they ever try to do that, then all you got to do is come back and say, of course it's going to crash. It always crashes, but every time it crashes, it always recovers. And that is actually quite accurate in the United States. Okay, so let me jump in. I see some more questions in the Q&A section. And like I said, don't forget tonight at 7 p.m. we're going to do that special lecture. It's totally free. It's basically built around 3 ways to achieve financial security without doing it by yourself. And anybody can join. There's the link right there in the chat. And if you can't see the link in the chat, just go to boycewatkins.com and the link is right there. And also, I want to remind everybody, don't forget that the convention's coming, the All Black National Convention's at the end of October. And at the end of October, we kind of just do everything. We do speed dating so that you can date, if you date nice black people, if you want to do that. We have a gala, which is really awesome. We also have lots of training on crypto and stocks and business, stuff like that. I'm going to have a meeting with the Dr. Boyce Book Club. And in addition to that, we're going to have lots of speakers and panels and stuff like that. So if you want to come to our big black family reunion of B1 people, then just go to boycewatkins.com. The links to the convention's all right there. And I think next week we'll actually open up vendor spots. So if you want to be a vendor or if you want to sponsor, if you have a black-owned business and you want to be a sponsor, we'd be happy to have you as a sponsor in exchange for a promotion. We'll promote you on our platform and put you out in front of 1 million people. So it's a quid pro quo. It's not a charity thing. We don't do charity. We only make investments with each other. All right. So Lid says, why do bonds move so differently than stocks? A lot of that's lids is because it's driven by different dynamics. To some extent, stocks and bonds can be competitors, where sometimes stocks will dip because money just transfers over to bonds, right? And then also bonds and stocks move based on different dynamics. So when you talk about things like rate hikes, when interest rates rise, both stocks and bonds get hit, but stocks and bonds may get hit differently because stocks maybe have a different range in terms of the structure and the nature of the different companies that are listed on the market. Whereas with bonds, the dynamics are a little bit more straightforward. With bonds, one thing that makes bonds very different from stocks is that there's a lot more certainty in the modeling of the price of a bond than there is in the price of a stock. So a bond, we know exactly how much money's coming. We know exactly when the money's coming. What the payout structure is. Well, the stock, you don't know. You don't really know exactly what Apple's going to be making 10 years from now, but you have to incorporate that in the model. So you're doing a lot of guessing. So ultimately, with stocks, you see a lot more volatility. You also see a lot less upside, with bonds than you do with stocks. So bonds are not really usually going to make you rich. Whereas with stocks, you can buy that stock that ends up, quadrupling in price or whatever because maybe some good information comes out. So stocks and bonds just have different dynamics in terms of investment. Generally speaking, bonds are less risky than stocks. That's kind of a good way to summarize that. All right. So next question, Kenneth says, my AT&T